HIMS is going to be reporting Q4 numbers on Monday after the bell. They're expected to put up 90% plus growth rates. It's actually going to be crazy. The stock is up over 190% year to date. So we're going to see where that ends up. In this video, I'm going to be explaining my full Q4 earnings preview along with all of my forecasts for HIMS and what I expect them to report. Let's jump right in. So in this video, I want to be covering members and the member breakdown. I want to also cover revenue per member, all the financials of the business, guidance, as well as some product offerings that I think they're going to be talking about on that call. Of course, I will be live streaming the call after the bell on Monday, talking about the earnings report, breaking that all down for you, as well as covering the earnings call itself. HIMS is currently sitting around $66 a share as of this recording. And basically, by the time of earnings, it could be 80 plus or it could be $40 depending on what they actually report. So let's now jump into a spreadsheet that I've put together and then we can talk about some of the specifics and I can walk you through the actual line items itself. Okay, so let's first dive into some of the subscriber numbers and the breakdowns here that you can see, and then we'll jump into some of the financials. So here you can see all of the numbers from the fourth quarter 2022 all the way through the third quarter of 2023, the latest quarter that they reported. We can see that on a yearly basis, subscribers have been growing, but one trend that we can clearly notice here is that non-personalized subscribers have been falling on a quarterly basis, whereas personalized solutions have been increasing quite rapidly on both a quarterly as well as a year over year basis. Now, my projected numbers here for non personalized is that we will continue to see a decline in the non personalized solutions. The reason is because management is going to be pushing more personalized solutions because they're essentially the same price. There's no utility in going for a non personalized solution. Management wants to increase that stickiness for their users. And so they're going to actively discourage more non personalized solutions while encouraging personalized solutions. And if you look over the long tail here, the new acquisition that they just completed earlier this week is something that's further going to push that personalization aspect. So here you can see a 22% increase quarter over quarter to 1.261 million personalized subscribers, which brings the total yearly growth rate to 174% year over year. However, on the non-personalized solutions, I'm picturing a 7% decline year over year because as more time passes, HIMS wants to push more people into that personalized solution bucket and increase that mix of personalized to non-personalized solutions. And this is just going off of the trends that we're seeing here. In terms of the single versus the multi-day, HIMS actively wants to push more multi-day subscribers. Of course, we will see a surge in single-day subscribers for one-off events like the Super Bowl or something to that effect, but that's obviously not going to be affecting this quarter. Everything with regards to the Super Bowl, because it happened on February the 9th, is going to be reflective in Q1 2025 and not in this latest report that we're getting on Monday. And when we go and add these numbers up and look at the total subscriber count, we can see 2.25 million total subscribers is my prediction for Q4, which brings the quarter over quarter growth to 10.3%, a slight acceleration, and the year over year growth to about 47% for subscribers. Now, even though this is a slight acceleration, this is still within their typical range of growth. And I struggled a little bit with this number because I can totally see personalized subscribers growing higher than 1.261. I can see them doing 1.3 million personalized subscribers for Q4. But this is a projection that I think is within their range. And it's not like thinking outside the box as to like we had a massive one-off event. If I was, for example, forecasting out the first quarter 2025 where you had the Super Bowl event, then obviously I would add a little bit of a kick to the numbers as a result of that and the Google traffic that we're seeing as well. Now, in terms of revenue here, I broke everything down. I don't really see a huge resurgence in wholesale revenue because that's not where they're driving their business, but I do see a big jump in online revenue to 476 million, bringing total revenue to 486 million, almost a 21% increase quarter over quarter and a 97.5% increase year over year. Analysts are only expecting 469 million in revenue, whereas my number is 486. Management is guiding for 465 million to 470 million in revenue. And 486 is only accounting for a slight 4% beat on analyst numbers. One of the reasons why I think this is going to come in stronger is that credit card sale data was really strong. And we've been seeing a lot in terms of Google Trends and overall activity for revenue to be increasing. The other thing to consider is that I think their monthly revenue per average subscriber is going to increase to $73. It's a slight increase, which is an assumption I'm making as a result of GLP-1s. When we saw this big jump up here to 67% average revenue per user, management highlighted in their report that this huge jump up was as a result of GLP-1 sales. And so I do think that is going to continue up to 73%. And conversely, it's going to affect gross margins. Gross margins are going to fall to 78%. Again, this is going to be an impact from GLP-1 specifically. Now, one thing to keep in mind here with regards to the average revenue per member is that this is going to be the last quarter that they're actually going to report this number. They're not going to be reporting this number going forward in 2025. Now, let's move down the financials and look at EBITDA and EBITDA margin. So for adjusted EBITDA, I put 59.1 million. Management's range is between 50 and 55 million, but we know that they consistently beat their numbers. And so I put 59.1 million for the actual adjusted EBITDA and a 12.1% EBITDA margin. If we look down now to the actual bottom line, I did net income margin, and the GAAP diluted EPS. So here's where the numbers get a little bit crazy, but I wanted to walk people through them. So I put 47.7 million in net income. This might be well in excess of what we can expect from management. This is a 9.81 net income margin off of the 486 million I had for revenue. And this comes out to 22 cents of EPS. Now, this might be very, very off because back in Q3, you saw 75 million here, but 60 million of that was as a result of a one-time tax benefit. And so their real revenue was about 15. And so you can imagine 11, 13, 15, 47 doesn't make sense at all because this number would be like a 3 times improvement off of the Q3 number. So it'd be very, very much inflated. But you have to also keep in mind that analysts are expecting 16 cents in EPS. And if you do 16 cents in EPS, that's like 35 million in Q4 net income is basically what analysts are expecting. And my number is higher than that. It's 22 cents in EPS, which brings it to about 47 million, around that range. So even the analyst expectation is for them to do double in net income for Q4 relative to Q3. So it's not going to be that big of a jump if they do triple that income in Q4. Of course, like I said, out of all of my numbers, I think this one might be the furthest off because we can actually see a number that's actually lower than this. So this is a little bit more bullish than anybody is expecting. But I think that, with regards to the average revenue per customer and with the increased subscribers and everything that they're putting up, that they can put up something relatively closer to this in terms of the bottom line. But again, even if they come in at 16 cents EPS, that's double Q3 earnings. Now, in terms of guidance, I picked this number of 1.48 billion, which was the full year revenue. And basically for that number, we're just adding up these 4 quarters here for the full year revenue to be 1.482 billion. And this is also including my own forecasted number here, which could also be off. And if we just account for 60% to 70% growth year over year, we can get a guidance range that's about 2.37 billion to 2.51 billion for the full year revenue for HIMS. This is a higher range than analysts are expecting. Analysts, I think, are expecting something in the range of 2.1 billion. And one of my thoughts with regards to this is that the GLP-1 shortages are going to be coming into an end in 2025, but we will have new product lines coming out in 2025, particularly liraglutide, testosterone, and menopause, which will counteract some of the negatives that we're going to see from GLP-1s coming off of shortage. Discussion is going to be mostly around when semaglutide comes off shortage, whether Q2 or whether Q3. I think those are the most likely candidates for when that will happen. But if semaglutide stays on shortage for the remainder of 2025, then that's obviously going to be very bullish for guidance. But if it comes off of shortage like in Q1, then that's obviously going to be bearish for the guidance number. So I think the GLP-1 number is going to be the biggest variance here in terms of our expectations for a revenue range for 2025. Like I said, for new products, I think they're going to be talking about these on the call and providing some type of guidance as to when we can expect some of these product lines coming out. But overall, I am expecting a triple beat for HIMS. I'm expecting them to come in above the revenue expectations of 486 million versus 469 expected by analysts. I'm expecting them to do 22 cents in EPS versus 16 cents expected by analysts, which might be very aggressive. And I'm expecting them to increase their guidance to 2.3 to 2.5 billion in full year 2025 revenue, which is also very bullish because we don't know exactly when the semaglutide is going to be coming off of shortage. Those are my Q4 HIMS predictions. We're going to see what that business actually ends up reporting on Monday. Follow me on this channel so you can be notified when I go live. I will be going live at 4 p.m. Eastern time on Monday, basically on market close, so that we can look at the report live on air, and we can also run through the earnings call live on air as well. If you're interested in learning more about HIMS in general, I am making more content that is HIMS related, so subscribe to the channel for more. If you enjoy these predictions, let me know in the comments, and also let me know your own predictions in the comments. I want to know like if I'm off base in some of my numbers, or if you're sort of in the same boat in terms of what we're expecting this business to do. It's run quite a bit, so I think that investor sentiment is going to be baking in a lot of success for this business. I think that if they don't report good guidance, they're going to tank. I think that if they miss any of these numbers, they're going to tank. And we're going to see what they actually end up doing. Implied volatility is going to be very, very high for this stock. So you might see a very aggressive move upward or downward, depending on what they actually report. Thank you so much for watching. I'll see you in the next one.